USDA announced their export inspections for this week a short time ago, and we have those numbers for you. We can take a closer look here. And we'll start with that corn number on the export numbers. So this time around, this past week, we had 1.55 million metric tons that was inspected for export. That means the inspections mean that the grain that has left the country, left the boundaries in one form or another, either on rail, on boat, truck, or whatever. So corn, 1.55 million metric tons. Last week was 1.45 million, and I checked, and last year that total was 815,000, so it was a sharp increase from a year ago. Sorghum, 143,109 this time around. Last week, the previous week, it was 55,000. A year ago, that number was 148,800. Soybeans, they now stand at 656,288, and a week before they were 946,047. A year ago, they were 715,800. And on the wheat, this time around, that number was 519,127. That compares to the previous week when we had 583,534. And a year ago at this time, that number stood at 407,042. So that's the latest information as far as our weekly grain export inspections numbers. Let's go ahead and go to the trading floor in Chicago and visit with Tim Evans. Tim happens to be with Longleaf Trading, and thanks for joining us here Tim. I wanted to get your analysis on the grain trade and if these export inspections numbers that we just went through really mean anything to the trade today or not.
Hey, good morning, Marlin. Nice to be with you today. While helpful, I mean, you know, the USDA number, you know, we're still seeing these markets dragged down by the burdensome supplies that, you know, we have in both corn and soybeans. I mean, with the Brazilian crop, you know, moving along above normal pace. We're at 56% versus 50, which is normal this time of year. You know, we have big supplies and we're expecting more to come. So, you know, we're going to need to see a string of very positive export numbers week over week, I think, to begin to kind of put a dent in the current supplies that the market's dealing with.
I was checking the news wires here a little bit ago, and they have some new weather updates for South America, where the harvest is currently underway. And it looks like in Brazil, they're looking for maybe a round of some heavy rainfall, possibly in the central part of the country, but it doesn't seem like it's really helping that soybean market too much yet today.
Yeah, I mean, the crop is far enough along where, I mean, it would have to be, you know, pretty intense weather to have any really kind of substantial impact on yields and, you know, what they get out of the fields. I mean, most of that comes from the Mato Grosso region, and they're farther along than the national average in Brazil. So, you know, I personally am not expecting, you know, weather to really play that big of a role in terms of, you know, what kind of yields we're looking at coming out of Brazil.
Well, let's take a look at our current futures trade here, Tim. On the corn, we begin there, and on the May contract, we've been under pressure all day long so far. We've been down 2 or 3 cents. Right now, we're still down 2 3/4 at 361.5, and we have new crop December down 2.5 at 384. Moving on to the soybean trade here, we've been on both sides of unchanged, and we're still almost totally flat now. May soybeans just 1 tick higher at 10.06 3/4. Again, a reminder that we sold 120,000 tons of soybeans overnight to unknown destinations. September soybeans up 1 3/4 right now at 10.07 3/4. Wheat trade in Chicago, we have the May contract down 9 1/4. The pressure continues, 431 1/4 here. On the Kansas City wheat trade, we have the May contract now at 444 3/4. That's down 10 3/4 cents. July new crop down 11. Minneapolis spring wheat trade, we have the May contract down 5.5 at 533. And looking at the cotton market, we have July currently 14 higher at 78.51, but new crop December unchanged at 75.29. Tim, we'll bring you back here in just a moment. We're talking with Tim Evans of Longleaf Trading, and we'll talk about your livestock trade when we come back right after this. We're talking right now with Tim Evans of Longleaf Trading. He's positioned right at the edge of the trading floor there at the CME Group in Chicago. And Tim, I want to visit with you about our livestock trade here. Boy, what a day on most of the livestock futures. We have a higher trade almost everywhere you look. And in fact, on the feeder cattle and the lean hog trade today, we've had triple-digit gains. So what do you make of those numbers as we start out the trading week here?
Well, I mean, I tell you, I mean, my personal view is, I mean, I think retail beef prices are really ultimately supporting, firm cash prices, as well as packer margins. Traders have been kind of positioning, expecting increasing supplies and downtrending cash activity here this time of year. And, these firm cash prices we've been seeing here over the last week, I think the market is beginning to have to kind of re-examine the analysis that had us where we were over the last couple of weeks in that downtrending cattle market. Given where we are and kind of given what the market is already priced in, I mean, my view is if we don't see weaker cash levels here over the next couple of weeks, I think the market is going to really look at this April live cattle contract as too cheap, and prices are going to adjust accordingly.
Well, let's dive into the prices here and check out the current futures trade. Let's go to live quotes in Chicago there. We have April live cattle currently 70 higher at 118.30, and we have June now trading 95 higher at 108.45. That's just a dime off our high of the day so far. August now up 85 at 103.90. That's a dime off of its high of the day. And on the feeder cattle side, this is the one that has been the leader all day long. We have March up $1.47. Look at April up $1.72. Last trade 128.40, just a dime from its high of the day. The May contract up 152 at 127.30. So a lot of folks wondering if the futures were going to rally and catch up with the cash. It seems like, at least today, they are attempting to. Let's take a look at the lean hog trade. And on the market right now, we have the April contract up 162 at 69.80. And we have May now up $1.58 at 74.48. Meanwhile, June up 155 at 78.45. So, Tim, this is another market here where we have triple-digit gains in the lean hog trade. Haven't seen that for quite some time. Looks like we had a little bit firmer pork carcass cutout value at midday, too.
Yeah, and I think the unexpectedly higher cutout values is really what's ultimately providing support for the market. We still have some pretty big supplies there, and you can make a pretty compelling case, bullish or bearish, depending on kind of the angle you're looking at the lean hog space currently. So, I think this is going to be kind of more. We can expect to see a little more of this moving forward this week, into next week. I mean, I think we're going to see extended levels of market volatility daily.
So do you think there's going to be a lot of spread trading activity between the hogs and the cattle? The cattle right now?
Absolutely, yes. I mean, that should be an extremely active trade here throughout the weekend and the next.
Okay, so you mentioned the lean hog trade, the way that it's rallying. How much upside potential do you think we realistically have in that market then?
Well, I told you last week when we spoke, if we saw a rally up at 69 and a quarter or so, at Longleaf we're interested sellers, and we're a little above those levels. So, I think just a couple of cents higher, maybe upward to 71, is a range that I don't see the market getting through and continuing a dynamic extension through those levels. So, we're willing sellers here a couple pennies higher than where we are now.
You are? Okay. Well, thanks for explaining that. Appreciate that very much. Tim Evans is with Longleaf Trading. He is there at Chicago, and we always thank Tim for the comments. Good to get his viewpoint.
Absolutely. Thank you very much, Marlin.